Over the last decade, the global gold and silver markets have experienced seismic shifts, many of which can be traced directly to China's carefully orchestrated strategies. Central to these shifts is the People's Bank of China's PBOC calculated approach to redefining the role of precious metals in its economy and as a tool of geopolitical influence. By leveraging platforms like the Shanghai Gold Exchange, SGE, and strategically timing initiatives to capitalize on market vulnerabilities, China has steadily positioned itself as a dominant player in the global precious metals market. The Chinese strategy has become increasingly evident with the relaxation of trading rules on the SGA, allowing smaller firms to engage in gold and silver transactions. These changes, coupled with China's broader economic and geopolitical ambitions, are reshaping the landscape of gold and silver markets. This shift has profound implications for traders, central banks, and nations alike, setting the stage for a transformative period in the history of precious metals. At the core of China's strategy is the Shanghai Gold Exchange, SGEA platform, that has become central to the country's ambitions to dominate the global gold market. By relaxing trading rules to permit smaller firms to trade in smaller volumes, the PBOC has opened the floodgates for millions of small and medium-sized enterprises, SMEs, to participate actively in the gold market. This democratization of access has significant implications, with over 55 million SMEs contributing to more than 60% of China's GDP and 80% of its urban employment. Their participation in gold trading represents a massive increase in domestic demand for precious metals. By involving these enterprises, China not only stabilizes its domestic economy, but also increases liquidity in the physical gold market, making it a formidable force in global pricing dynamics. The scale of this initiative is unprecedented. In March 2024 alone, China registered an average of 23,800 new enterprises daily, further emphasizing the magnitude of this strategy. These SMEs are now not just drivers of economic growth, but also participants in a broader strategy to accumulate gold reserves. This grassroots approach is a testament to China's ability to integrate economic policies with its geopolitical objectives seamlessly. Gold has always been viewed as a safe haven asset, especially during times of financial or geopolitical uncertainty. For China, the accumulation of gold is more than just an economic strategy. It is a hedge against potential financial instability and a tool for navigating an increasingly volatile global landscape. The PBOC's approach is methodical. By acquiring undervalued gold from Western markets, China positions itself to capitalize on future price increases. This strategy not only strengthens the country's financial resilience, but also provides a buffer against the dominance of the US dollar. The accumulation of gold reserves serves as a counterbalance to dollar-denominated assets, reducing China's exposure to the risks associated with US economic policies. The timing of these moves is particularly noteworthy. As tensions between the US and China escalate, fueled by disputes over trade, technology, and territorial claims, the role of gold as a financial weapon becomes increasingly apparent. Beijing's ability to leverage its gold reserves in economic negotiations or as collateral for international deals underscores the strategic importance of this asset. While much of the focus has been on gold, silver is also experiencing a renaissance in China. The PBOC's decision to include silver in its strategic initiatives reflects the growing industrial demand for this metal. Silver's unique properties make it indispensable in various industries, from electronics to renewable energy, aligning with China's ambitions to lead in technological innovation and green energy. Analysts predict that silver prices could reach all-time highs by the first quarter of 2025, driven by increased demand and the limitations of paper markets to fulfill physical settlements. The inclusion of silver in the SGA's expanded trading framework further enhances its liquidity and positions it as a critical component of China's economic strategy. China's accumulation of gold and silver reserves is intrinsically tied to its broader geopolitical objectives. At the heart of these efforts is the ambition to reduce dependence on the US dollar and promote the Chinese yuan as a global reserve currency. This goal has gained urgency as the US-China rivalry intensifies, with both nations vying for economic and geopolitical supremacy. One of the most significant developments in this context is the potential introduction of a gold-backed currency by China and its BRICS partners. Such a currency would represent a direct challenge to the US dollar's dominance in international trade. Analysts like Andrew Maguire have highlighted the disruptive potential of this move, predicting that it could trigger a global revaluation of central bank gold reserves. The implications of a gold-backed currency are profound. It would force central banks worldwide to adjust their holdings, creating significant shifts in financial markets. Moreover, the resulting disruption of paper gold markets would expose the suppressed true value of gold, potentially pushing prices well above $3,000 per ounce by 2024. China's decision to involve SMEs in its gold strategy is a masterstroke. These enterprises are not just economic contributors, they are now instruments of a larger geopolitical strategy. By enabling SMEs to participate in gold trading, the PBOC creates a decentralized mechanism for gold accumulation that is resilient to external pressures. The scale of SME participation is staggering. Collectively, these enterprises account for half of China's tax revenue and are responsible for a significant portion of its technological innovation. Their involvement in the gold market not only boosts domestic demand, but also strengthens China's economic foundation. This approach also has a psychological impact on global markets. By demonstrating the scale and sophistication of its gold strategy, China sends a clear message to the world about its intentions and capabilities. It is a reminder that the country's economic policies are not just about immediate gains, but are part of a long-term vision to reshape the global financial order. The shift from paper-based markets to a more physical, central bank-backed environment marks a new phase in the history of gold and silver. China's role in this transition is undeniable. By strategically increasing its gold and silver reserves and making key adjustments to its domestic market structure, the country is setting the stage for a transformative period in the precious metals market. As central banks worldwide adjust their policies to accommodate these changes, the demand for physical gold and silver is expected to rise. This demand will likely continue to drive the revaluation processes, reshaping the global financial landscape. China's strategic initiatives in the gold and silver markets are more than just economic maneuvers. They are a blueprint for a new global financial order. By leveraging its economic resources and aligning its strategies with long-term geopolitical objectives, China is challenging the dominance of the US dollar and redefining the role of precious metals in international trade. The implications of these changes are far-reaching. As the world watches these developments unfold, one thing is clear: the global financial system is on the cusp of a significant transformation, with China leading the way.